time? Guys, did we just go live? There is no way that we have not been live until now. Yo, YouTube, did we just go live? And George, let's get the microphone muted up, bro. No way that we have not been live until now. Can you say how the news moves again based on the numbers that are released? Good, bad, expected. I'm not live, bro. Fuck. All right. Man, what y'all saw me click it like 4 times, right? No, it's not been live. That's why I asked you. All right. Yeah. If man, that was some heat. I didn't even record it so I can post it for you guys later. All right, here's how the news works. If the market comes out as expected, typically you see a bullish bounce. This is for stocks because markets usually follow expectations. So just write this down. If it's same as expected, bullish. And this is obviously different for every data point, what happens next. Because if it's better than expectations or worse than expectations, it just depends on what we're looking at. You don't want inflation to be higher than expectations, but you want GDP to be higher than expectations. So knowing like the very basics of these things is going to help you figure out if the news came out better or worse than the forecast. If the news comes out better than forecasted, whatever that number might be, typically it's bullish for stocks. If the numbers come out better than expected, so the situation on the ground is better than the economist expectations, markets go up. If the reality is worse than what you expected, typically markets go down. Today, the reality was worse than we expected. The inflation rate is higher than the market anticipated. So we're seeing a big correction on these risk assets. All right, so no buys for me, no more buys for me today. Taking a few losses this week. They're starting to add up here. So I'm gonna take a step back and then just really gauge whether sellers are in full control or not. Today's candle is going to be crucial because we can drop however long the market decides to, but if we connect back up and we start to fill that move, there's a chance that this was just a much needed correction after a very aggressive bullish push or very aggressive bullish trend, and then a much needed correction to clear a ton of liquidity, entice more orders to get into the market, and then we can continue the overall bullish trend. So right now, it's a waiting game to see how the market reacts to some of these other levels. And then, of course, if the market breaks back above that 17,720, I'll be taking buy positions on the way back in. All right. We're seeing that 570 zone that we talked about starting to get rejected. And so the bearish scenario looks like this: rejection, back to the support, and then crash. The buys look like break back inside, correction, higher low, and pop. So 17,720 is that zone I'm watching. And there could be a reaction here at the 886, but I've taken a few losses buying this market. I'd like to see a reaction first before I continue to impose my directional bias on what the market is doing. He said, respect for hopping on this morning. I appreciate it, but like the whole reason I did all this, I could have just stuck to my guns and just I don't know. I hate technology so fucking much, people. I hate technology so much. And that's like the advantage that I think most people have is that a lot of these guys put most of their effort on technology, which is setting up the right stream and having the right platforms and having the right camera angle and all this stuff. But then they lack on the actual trading or the actual understanding of macroeconomics or understanding of trading psychology or the ability to articulate these things in a way that's relatable. For me, I'm more focused on the content and I'm more focused on the quality of the stream as opposed to like the technical qualities. But that's something we're working on next. I need to have like everything fully set up because it's been 3 years. There's no reason why this shit is still having issues. I don't know. Okay. Um, Gold 1997, US 30 hit that TP we had marked off, but big, big, big corrections coming in. I think that the Jeff Bezos news is the one for me. That's what did it. That's if there's a bearish signal right now to follow, it's not any of the economic data points like CPI or GDP or interest rates. I would say the number one bearish sign is the largest investors in the country taking profits. Not because retail is going to follow, but because institutions are going to follow Bezos's lead. Bezos and Elon both sold at the top of the 2021 market. And then all of the investors that are one class below were like, oh shit, if the smartest people in the world are selling, I should too. And then that led to a cascade. And then eventually the market was falling so fast that all the hedge funds, the risk parity funds, the high beta firms, and the high frequency trading funds, they all became net sellers after a certain percentage change in the market, which is typically what happens. Like if the market drops very quickly in a short amount of time, it triggers algorithms all across the market to become net sellers for the day as opposed to net buyers because they're just gauging if there's a reversal or not based on a percentage drop in a short amount of time. And so whenever we see these massive drops, if it continues, first you get the investors, then you get the high frequency trading firms, hedge funds, and that class of traders. And then you'll see retail come in after and sort of like a FOMO selling kind of situation. And then, yeah, and then the prices get discounted enough to where institutions see that as an opportunity. And that's where we see recovery whenever the market corrects. Please add subtitle captions in English. I got you. I'll be honest, I'm not going to be here much longer. I don't think there's another trade opportunity, and I think I've been staying on the charts a little bit longer than I need to, which is causing, like yesterday, just in full transparency, we made a lot of money. We had a great, like honestly, one of the best trade opportunities that I've seen in a while. Very clear, 88.6 retest, straight to the upside. It was an absolute banger of a trade. But then afterwards, I ended up taking longs a few times at several different levels on the way down, and I ended up giving the money back and ended the day in a loss. And I think a big part of that is staying on too long and like starting to allow what you want to happen or what you think to happen to blend in with what's right in front of you. That's why I always say we have a timer on the quality of our decision makings. There's a diminishing return or a diminishing effect on every decision that you make in trading. So every decision that comes next is going to get worse and worse and worse because it's like a battery, right? You're using really when you're making a decision, everyone's like, what do you mean you only have a set number of decisions? Like I can just keep making choices. Making a choice and making a clear decision are two different things. A decision is based on a synthesis of information in your brain. So your brain has all these different areas that track long-term memory, short-term memory, emotional response, clarity, everything else. And so when you're synthesizing a decision, you're inputting the data. Your brain has to piece small pieces of info from every part of your brain. So like the risk management side, the emotional side, the, hey, we've seen this before, kind of experiential long-term memory side. And then you're synthesizing all of that into a conclusion to come up with a solid decision. You can only do that so many times before the quality of these decisions becomes shit. Okay? So the less time on the charts, the better. That's why I'm not going to be overstaying my welcome today because I feel like the longer I stay, I'm going to find another potential level that I would normally trade from, another 88.6 somewhere on the way down, and just feel enticed to get in. For me, I want to see a clear confirmation that buyers have stepped back in, and then it's very easy to just wait for a pullback and keep trading the longs. But for now, I want to wait for the market to settle because, yeah, and I'm not going to overstay my welcome. So I'll be here for about another 15, maybe 20 minutes. I'll probably be off before market open. Any questions, comments, concerns? We talked about Bitcoin. We talked about NASDAQ. We talked about the DXY seeing tons and tons of flow. We talked about gold buys potentially at 1997, which we're getting pretty close. That's basically it. Everything is so far away from entries that it's just a pullback kind of situation. All right. Does anybody have any questions, comments, concerns in the YouTube chat? CA members, we win some, we lose some. That's why risk management is top priority. Would this be a break? Would this be a retest back inside the box in the higher time frame? Yes. We'll go like this. Whenever you have a high and then the market has this massive expansion, you'll typically come back to retest inside the range. Inside the range, probably halfway through, and then continue back up. So what I would do is mark this between high and low. My fib is upside down. High and low. And then the 61 would be a pretty good area right here. You could get 61 and pop. And then at this point, because of how aggressive the market is, we could go as low as the 38. So market would come all the way down. Okay, maybe even go a little bit lower, like 88% from here, and then continue to the upside. If we break these lows, we would just look for the 88.6 from down here. But I think we would need a bigger catalyst than just one CPI print. Jerome Powell said it in the press conference. Even if CPI comes out slightly hotter than expected, we're not going to be tightening. We're not going to be tightening anymore, and there's still a possibility of rate cuts this year. And this is exactly what we saw, which is slightly hotter than expected. Jerome Powell still likely to cut rates in May. We win, we lose. That's how this game is, for sure. Thanks, Roy. I may have missed this, but I'll ask just in case. If CPI was higher, why does indices go down and USD pairs go up? George, I've explained that about 4 or 5 times. I didn't even record the thing, so I can't even use that excuse. I guess I'm the dickhead. Okay, I'll explain it again. CPI, because this is where critical thinking comes in. Give a man a fish, feed him for a day. But if I just give you the answer, you're going to ask me 50 more times every time that we have a news event. So if I teach you how this works, ideally you can do this for yourself. It takes some critical thinking, though. CPI equals the change in prices. Okay, so if CPI is up, that means that prices have gone up. That's inflation. Okay, same thing. CPI is just the consumer price index, which is a measure of inflation. Prices going up or down. So if prices are up and things are getting more expensive, is that good or bad for the economy? It's all good, George. It's my fault for not recording. I'm just more mad at myself because I could have sworn on everything I love. I clicked start stream and it did not start. But I'm gonna have you answer this question. If prices are going up at the stores, because it's been an issue for 3 years. If you haven't been paying attention for 3 years, we got an even bigger problem. But for the past 3 years, inflation has been the #1 topic in finance. And so if prices continue to go up, is that good or bad for the economy? And George, I'm asking you specifically. He said it's bad. So if prices are still going up, and right now, the reason that markets have been bullish is because there's an expectation that prices are done going up. We've reached the end and they've started to come down. So this is kind of how the graph would look, is that we're starting to come down in the inflation. And then right now, we just saw price start to tick back up a little bit in inflation. And that has the markets panicked. So if inflation goes up, that's bad for the economy because prices continue to go up, which means the Fed is going to have to do what, George? What is the Fed's response? And what has it been historically over the past few years as it relates to inflation? What has the Fed been doing to fight inflation? Raising interest rates. Mike, is your name George? Bro, this man, Mike. Mike is that kid in the class that studied like his ass off, and the teacher was trying to prove a point about how nobody studied, and then the person in the class that literally studied for everybody is answering all the questions. Mike, chill. He said, I didn't copy him. He said, I was watching y'all during the test. You had ChatGPT on your lap. All right. So long story short, inflation going back up, not good for anybody except for asset holders in general. And so this is the expectation the Fed might have to get aggressive. And whenever the Fed even mentions being aggressive in language, not even in action, just in their language, prices react. And that's what we're seeing now. The party is over. Everyone's like, guys, my parents are out of town for the weekend. Let's throw a party. Okay, that was 2008. So we started a party. Party's been going for 14 years. Things got so out of hand. There was so many complaints from the neighbors, and then prices and everything just got so high that the adults had to step back in. This was in 2020. And then the party was over, and everybody started to leave the party. That was the sell-off that we saw late 2021 going into 2022. And then everybody started to think that the party, like the parents ended up going to sleep or ended up going to the store or something, and everyone thought the party was back on in 2023. That's why we've been seeing this massive bullish rise, even though inflation hasn't really come down to the Fed's target. Everyone got so excited and thinking the party was back on. And then now they're kind of hearing whispers that the parents might be coming back into town and that they might actually be in town. And then everything is starting to kind of come back in. So Jerome Powell is the adult in the room. The market participants in Wall Street and the retail gambling crowd who's just waiting for when bullish, right? They are the party goers. And the drug is this money printing, the money being pumped in and pumping stocks and Bitcoin and everything else. And there's a market euphoria happening right now. Okay, so the party goers are getting a little bit scared about the adults stepping back in the room. Make sense? Does that analogy make sense, everybody? Thank you for streaming every day. I'm about to have my first payout on Friday, and I'm planning on spending it to join your membership. Awesome stuff. The membership is not available for the open public. If you're not a previous coaching student or a previous NAS100 masterclass student, you can't buy your way into the VIP membership. However, if you guys are interested in getting in, the best place to do that is the 3-day psychology bootcamp, which will also give you a 1-month free access to the group chat. Just to clarify, the better CPI is, the worse it is for us currency. Better, worse, I don't know. Better and worse are not the right words to use. CPI being higher than expected is good for CPI being higher than expected, meaning prices are higher than expected, is bad for people, right? Bad for the economy, but it's good for markets. So if you own stocks, if you own real estate, and if you own, let's say, crypto, then high inflation is good for you because you're an asset holder. The truth is the majority of Americans are not asset holders. And so all they get is higher prices at the grocery store. So high prices at the grocery store is not good. I'm really struggling to let my trades run to TP. Any tips? Well, the question is, do you have a clearly defined system? If you don't have a system that you can rely on every time, that's based on you having tested that strategy and you having back tested it, then you can never expect yourself to hold trades. Like you will never hold a trade to TP unless you completely distract yourself. Without a proper plan, you cannot be expected to just crunch and hold and then just have anxiety until maybe the market goes to your target. Because every candle that goes against you is going to start to play with your psychology. And just like I said, there's a diminishing effect. Every decision you have to make, it gets harder and harder and harder. If you're in drawdown or you're in profits, and every second you're trying to stop yourself from closing or re-entering, you're going to be exhausted about 3-4 decisions in. Does that make sense? And so have a clearly defined system and then backtest it until your eyes fucking bleed. Most people do not know their strategy the way they should. When you backtest something, you build the confidence. I know some people are like, oh, I don't backtest, I don't do this. Are you fucking stupid? How are you going to go into war without knowing how to run the game plan or how to shoot a gun? Oh, I'll figure it out once the bullets start flying. What? Get your ass back on the sideline. Get on the front lines, matter of fact. What? So don't try to play this. Don't try to learn shit on like in game. You're having trouble holding trades. You're like, hey, I'll figure that out later. Let me just enter the next one. How the fuck is that supposed to help? You just said the issue is not entering the trades. It's obviously not holding it. Until you figure that out, why would you take the next trade? So backtesting builds confidence. And then obviously you cannot negate experience. Experience will show you so much about, not about the markets, but about yourself. Experience has never been about learning more about the technical thing. It's about learning how you react to different scenarios. All right. So it's like playing the guitar. Once you learn the chords and once you learn how to string chords together, how to string notes together, you kind of have the basics down. Experience is going to teach you how you react. Like you want to do this riff thing and you realize your fingers ain't built for that. That's experience. All right, I better find a better way to do this, or I better find another technique here. All right, very, very big deal. Are we entering the 88.6? I don't know about this whole we nonsense, but I am not entering the 88.6. There could be a rejection here, but guys, I've taken a few losses back to back, and I realize it's just because I'm trying to take advantage of every opportunity. And that's not a bad thing, but after a certain amount of losses, it is important to take a step back and at least assess what is happening here. For me, I'm married to my bias, which is what I've realized yesterday, because I kept trying to enter. I entered this 88.6 smaller time frame. I entered this 88.6 this morning. I entered an 88.6 right here. And it's just been one after the other. So yesterday, giving back the profits was it was a wake-up call. And then this morning, losing this trade right here, back to back to back. You got to categorize into high probability and low probability trades and stick to the high probability ones. Exactly. And with that being said, you'll never know which ones are going to be the bangers. Sometimes the sketchiest trades, the lowest probability trade, because of the location or whatever it might be, is the best one. It's quick, it's effective, there's no drawdown, and the risk and reward is phenomenal. So don't get too wrapped up in finding out which one's high probability and which one's not. It's as simple as this. You have a set of 5 confirmations, your criteria to execute the trade. If it meets half the confirmations, that's an okay trade. If you meet 4 out of the 5, that's a high risk trade, or that's a high probability trade. And if you have 5 out of 5, that is the highest probability trade. When you have 5 out of 5 confirmations, the trade can still lose. This is what most beginner traders don't realize. Having the high probability doesn't make it impossible for the trade to lose. Probability and possibility are very different things. Okay? It's probable that the market will do this thing, but it's also possible that the market does not give a shit and just does the opposite. And we have to accept that. And so, yes, only take high probability trades, but understand the limitations of probability. Golds are coming into that area that you were looking at. Roy, can I have some info about the FX Summit tickets? Yeah, I'll be launching the info here. If you purchase a seat to the masterclass or to the bootcamp on March 1st, you get 1 month free access to the Chart Addicts VIP to come connect with myself and all the incredible Chart Addicts members and the rest of our trading team. And you also get a free general admission ticket to the largest traders conference in the world, the FX Summit 2024 conference in Dubai. So if you guys want a free general admission ticket, which are $400, and you want 1 month free access to the VIP, which is $250, and you want access to the masterclass, which is $500, so $900, $1,150. So if you want an $1,150 value, buy the masterclass. You get your first month free with the VIP, and you also get a free general admission ticket that goes along with your purchase. That is crazy. That is unbelievable. Do not sleep on this opportunity. We're going to come back and look at this in 2 months and say, I cannot believe I even offered that publicly. And I didn't consult my team about that either. Some of them are going to be watching this. Be like, what did you just say? Did you just offer everybody a free ticket? The answer is yes. Why? Because if you take any of our classes, if you guys were in the NAS100 masterclass, I want to see you in person, right? I love the people that interact with us on social media, right? Great. I want to see them too. If you took this serious, I know for a fact you're going to be a successful trader. And I know for a fact that you care about the skill set, care about your future, and have a longer term perspective. Exactly why I love having you guys in this Chart Addicts group chat. So with that being said, I want you guys to show up to the FX Summit because I want to meet you all and obviously keep that trajectory for your success going. And so that's why the free ticket is being offered, especially to the folks that are already VIP members or who are already in the chats. Just know, like, we want to do those exclusive workshops just for CA members. We want to have those exclusive networking meetups. So don't sleep on that opportunity. March 1st, psychology bootcamp, 3 days to get your head back on track, to get your mindset fully engaged for trading. Okay, we hit the 88.6 on US 30. So US 30 for longs looks a lot more attractive than NASDAQ does. The R&R here is a little ugly. Maybe if I go below this low right here. 2.8 to 1, pretty close, 2.8 to 1. Beautiful 886 rejection. If it's bearish, I think that we see a nice push at market open and then crash. If it's bullish, I think that we fake down first and then shoot back up at the market open. So I'll stick around here. I know I said I was supposed to be off. I'll give it 15 more minutes, and then we will review the market open. I'm gonna grab some coffee real quick. Post any questions you have in the chat, and we'll go ahead and answer those in just a second once I get back. All right, I'll be back in just a second. Post up any of your questions. Bryce, hold down the fort. All right, I'm back. 88.6 is holding so far. This could be it, but I'm going to be a little bit more patient with this one. We shouldn't enter before market open. I wouldn't necessarily say that. Like if I hadn't had already taken a few losses, I would take this trade only because location is also, or price is very important. If the market is sitting right at your entry zone, that means that the market open, if you want to wait, price is probably going to end up here in the first few candles. So at that point, you're going to be a little late on the wave. So if you did want to enter this position, the best R&R that you could get would be right here. Let's take a look at this example. So we could get away with about a 3.3 to 1 R entering at the 88.6. If we wait for the market open push, might see, let's say we even waited until this zone, the R&R gets cut dramatically to 2 to 1. And you guys, I always say this, the theoretical risk and reward and then the actual, your realized risk and reward are completely different. We might be planning for a 2 to 1, but as we secure partial profits, it's not going to add up to 2 to 1. You're not going to make, if you risk $1,000, you might not make 2,100. You might make 1,500 or 1,400 taking partial profits. That's why the higher R&R is better, because we're not going to get, that 3 to 1 either. However, If we, instead of if you're risking $1,000, you're not going to make 3,200, but you might make 2,000. So you still realize a real 1 to 2. And I had somebody posted this great chart, and I know this isn't what most of you guys are used to, but it's a Monte Carlo a simulation, which is basically where you take like 100 different scenarios and then you run the scenario testing to compare against each other. And they compared risk and reward and win rate to see which one was the most profitable over time. Let me send this on Discord. This is so good. This is so good. Long story short, a 1-to-1 risk and reward ratio with a 60% win rate is that golden ticket. That's the golden ticket, at least based on this Monte Carlo simulation chart right here. This is gonna look complicated at first, but don't get intimidated by it. Okay. These are all the different scenarios. It's like the balance that you would start with, which I believe was the starting balance of 100K. Oh no, it looks like they started at like 93 or 94 or something. But after 250 trades, there are several these are different options based on R&R and higher win rate. So 80% win rate with a lower R&R versus a 1-to-3 risk and reward and 20% win rate, etc. And over 250 trades, the one that was the most consistent and the one that was like that average was sitting there at 60% win rate and a 1-to-1 R&R. So for everybody who's trying to force those opportunities or to force a higher R&R or a higher win rate or whatever it might be, the strategy that we have right now, you can easily achieve a 60% win rate as long as we're not taking random trades. And then the risk and reward, it's like we notice that whenever price hits TP1, that's a 1-to-1. So it's like the person that closes TP1 with the full position and does that all the time is going to make the most money. And I think that I realized that, but I was always missing out on the upside, which is why I started taking the majority of my profits at TP1, 70%, and then letting the rest ride. Because those will also make up for, they'll kind of create a higher risk and reward. And if you're in break even, your win rate shouldn't suffer because even if the market reverses, it just hits break even. It's not really a loss. Where are your discount and premium zones? Right here. So if we're on the 4-hour, that's the high and that's the low. Yeah, we got a long way down, folks. We got a long way down. Got a long way down here. I'm just trying to line up the Fibonacci with price action, seeing where I get the most touches here. So in that case, if we're going to look at the higher time frame zone from low to high, right now we're at about a 50% correction. We're about halfway down. 61 is right here. 78 is right here, right below this area of support. You guys can see support right here where the market pushed off, support right here, support right here. There's a very strong level at the 7-8. I'd like to see price stop at that level and consolidate and then fake down to 17,220. So consolidation, fake down, and then we get that push to the upside. That I think is the most likely play, especially based on how aggressive the market is right now. Okay, price was playing in this beautiful channel or potentially like it's a wedge. Typically the wedge breakouts go breakout, hit a previous area of support, and then continue that way. If we break these lows, we got a long way to the downside, and we'll reassess if that happens. I'm personally done trading for the day. I'm gonna be an observer as to not keep blowing my money or putting my money at risk. I'm just gonna take a step back, observe the reality of what's happening, and then once the market is established, new structure, then I'm looking forward to re-entering. Is it okay to just place a trade and then get off PC, or is it better to place a trade and stay and manage it? Again, Dario, it really depends on your strategy. So the same thing I told you about struggling with letting your trades run to TP is that when you back test your system, you can trust it and you can walk away. And I know it's easier said than done. We all say like, "Ah, I'm just going to walk away," and then you end up checking your phone. There's two reasons why we check our phone incessantly after a trade. Number one is a lack of confidence, either in ourselves or in the system itself. When you see it so many times, you're like, yeah, it's either going to reject and go to my TP or it's not. And so you're able to have that binary choice because you've done the prep work. The second reason that people have trouble holding their trades or have trouble walking away is because of leverage. If you're over leveraged, you will always struggle in trading because every point in the wrong direction is going to feel like the end of the world. Every move in the right direction is going to feel like the greatest thing in the world. And you're going to constantly be on that emotional roller coaster of euphoric and then disappointed, and then euphoric and then disappointed. So take some time away from charts, back test your system until you get very clear about what you're looking for. And then it doesn't matter if you're on the charts or not. The question is going to be, did it break this level or not? So for me, I have this low all the way down here. Okay, so the way I look at this is the market's either going to come down here, create a higher floor, and then continue, or it's going to get down here and blow through. I know that from experience. If I enter down here and I over leverage, then it doesn't matter if the market dips down a little bit and then continues or does what. There's going to be a chance that I close prematurely. Same with the upside. If you're over leveraged and you see profits on the table, instead of looking at the trade idea and saying, okay, we haven't hit TP1 yet, so I'm going to hold. We haven't hit TP2 yet, so I'm going to hold. Now you're making a decision based on how much money is on the screen. And then depending on your relationship with money, whether it's at that moment or just in general, that will dictate your decision, whether stay or get out. And that should never happen. You should never allow your life circumstance to determine your trading decisions. Except, I'll say this here, except if you want to take profits early and you're doing that consistently and you're doing it because of your financial circumstance, because you have to pay bills, you got to pay off debts, whatever. So you're going to take the money as opposed to holding the trade. That's valid because you understand exactly what you're doing. But other than that, do not allow the money to dictate your decisions, and then have a plan that is so well defined that you no longer have that indecision when it comes to those few choices. He said, so we should enter for a buy now. Bro, what type of bro? I'm trying so hard to turn over a new leaf. I'm trying to make these streams professional, right? I stopped drinking caffeine before the streams. I'm out here getting my life right. All right, I'm on the electrolyte wave now. Get some salts, get some electrolytes, magnesium, potassium in your system. I was feeling good. After everything I just said, this dude is really going to ask, should we enter a buy right now? Is it you or your team organizing FX Summit or another company, and who are they? That's a very interrogatory question. Can you ask something a little bit more specific? Because when you said, is it us organizing the summit, that's a clear answer. The answer is yes. But when you're like, or is it another team? Or is it your team? Or is it somebody else? It's like, bro, hold on. What is the nature of your question? And Robin, you guys know I'm trying to turn over a new leaf. I told you guys there's too much bullshit as it is, and I'm trying to be a better example. But you guys get it's these questions, man. It's these questions. Some prop firms have noted that they are likely to come back in the next few weeks. My bet is that very shortly, any prop firm that is using MetaTrade or is using MetaQuotes will no longer accept you as clients. And then obviously we've been talking about MetaTrader 4 no longer existing for a while because they're going to take it off the shelves. The reality is that MetaQuotes allowed a lot of behavior on their platform until they got kind of in trouble. And now MetaQuotes is cleaning up shop. They're going through and they're looking at all the different participants on their platform, looking into their white label operations and all the stuff that they're getting away with. And they realize that they're all catering to US clients. And so now one by one, they got purged. So if you see someone that is going to accept you as clients, they're very likely not going to, like the ones that are going to accept you as clients, it's just such a risky game for them. I just don't, it doesn't make sense for any of the firms to accept the US clients right now. Some people are gamifying the prop firm, kind of saying like, play this game and make money, which is not a bad idea. It's something that we have been building for a while, which is like an alternative to prop firms with live market conditions, but the legality of it is just 100% there. But like I said yesterday, big players will still dominate. The same ones, the same faces, the same names. Maybe not the same name, but the same people, institution, organizations that have been kind of in control, I think are going to continue to dominate going forward. All right, we have market open right now. Bearish market open. Obviously, inflation came out higher than expected. Tons of selling happening with the largest Mag 7 stocks. We're talking about NVIDIA and the rest. Let's see if we get this fake down push up first at the market open, or if we just get this straight bleed through. There's a possibility we get the straight bleed through, but at this point, I'm not here to guess what the market's going to do next. I took an early entry for CPI, did not go my way, and now I'm reassessing to see if the market recovers bullish so I can start buying again. So as of right now, no rash decisions, no trades. I'm currently not in any trades. Good information, Roy. 17,280 seems like the level. I agree. I think that lower level is a lot more attractive than the rest. Will says, you stream, we ask. I get it. You have the right to ask. I got the right to respond. Isn't that crazy how that works? Funded Next is no longer in the USA. Yeah, same with TFF and Funded Engineer and a bunch of others. Why not accept US clients? Forex trading generally has been done illegally in this country. And didn't really realize this until I started working at Merrill. When I worked at Merrill, when I was getting my Series 66 license and my Series 7 license, part of the curriculum was understanding alternative investments. And so for my high net worth clients, if you made more than $1 million a year or had more than a $5 million net worth, you had access to alternative investments that a non-accredited investor didn't have access to, like private equity and some other things. Currency exposure is only reserved for high net worth clients who are accredited. And so we couldn't even trade Forex. So how do people trade spot Forex in the US? Well, really trading CFDs is illegal in the US. And so we've been trading futures, or there's an offshore broker that came up and none of us knew better. We were trading on those. So I preferred a prop firm because for me, if I'm going to play this game, it's going to have to be with a firm that's at least trying to not, to not promote itself as a financial service company. So long story short, Forex trading, very sketchy. CFDs, illegal in the States. Futures are legal. And that's why all of the brokers are sort of, they kind of like prop firms took over the broker wave. Steve says tier 2, Roy. Are you talking about tier 2 liquidity? Or what are you talking about? How to master fundamentals. Getting on this stream might not hurt. I'll just tell you that much. Chris Brown said, yeah, they clipped me this morning, Funded Next. Let me hear something because let me hear something real quick because this is one of my biggest concerns right now. If you guys have a live account with any of these firms that have been shut down, have they refunded you the money or have they just closed your account? Furthermore, if you have any payouts, have they denied your payouts? And then furthermore, if you had open trades, did they close them? Let me hear some experiences across all the different firms just so I can have an idea of, I don't say how bad this is, but how impactful this is right now. Trade 2. One and a half to one R&R just to the first take profit level. I'm not taking that. If it pushes up, beautiful. I am not taking these trades. I'm going to personally stay out. I think over the medium and long term, stocks are bullish, as always. But I think in the short term, we could see some bearish action, and it's not even confirmed yet. We're still forming higher lows. We have this low right here. We have this low right here. And then now we have a higher low right here. And so even though we've seen this massive correction, as of right this second, it's still bullish by definition. So I'm not going to write off the buys completely until we break this area. At that point, that's when I will see that 17,220 or 17,280 level be the most attractive, or sorry, 220 to 250 level to be the most attractive buy option. Make sense? Chris says, so far nothing. I'm waiting. So no mention of a refund, no clarity as to whether it's coming or not. It's really just kind of up in the air, which is crazy. The lack of clarity is absolutely insane. Said, look at XAU. It's almost time. The thing about gold is, especially if you're looking for this higher time frame opportunity, like a real higher time frame flip in the market, you might see a little bit more drawdown into this range. So you could enter one position here, which is, I think, what I might do here. Now, I think we might, I want to see one more candle. I want to see one more candle down because I've done this, like I don't trade gold anymore. But whenever I do trade gold, I look for these higher time frame sort of swings, and there's always some wick BS. And by wick BS, I mean just look at gold. Look at every reversal is accompanied by an aggressive wick. And if you just go through and measure all the wicks on average, that's 45 points. That's 50 points. Let me see. That's 73 points, 58, 53, 80. Okay, so we're looking at these reversal points. You're looking at it anywhere between a 50 to 80 point liquidity grab before the market starts moving. So let's take a look right here. Well, this has been about 40 already. So here's my assessment, which is if the market closes above with a body, above the 1999 or above the 1998 even, this is going to be a perfect buy opportunity for gold, if it's not already. We have another 22 minutes in this closure, and then we have another, yeah, we have another 22 minutes in this hour closure. So give it about 20 minutes, wait for the rejection. If you see the closure back above the zone, that's a perfect opportunity right there. All right, but I want everyone to keep an eye on this. Right or wrong, we have been waiting for this level for quite some time. People are always asking me every morning, what do you see on gold? And I literally just go up to the higher time frames and say 1997, 1998, that's where we're looking to buy. I just keep saying it like a broken record, keep saying it like a broken record. And then eventually price hits here. We're going to see a reaction and everyone's going to pretend like, we never said it. Nice rejection on NASDAQ. NASDAQ has rejected the 88.6. The trade is technically valid. From 88, at least to TP1. TP3 would be all the way up here at 18,000. So personally, I'm going to stay out of this one. All right, if we see a nice bullish push and then in about half an hour, we get a double bottom, I'll take the double bottom entry because I've allowed first the market to establish the intention that bulls are in control. It's allowed me to see that bulls have taken back control of the market. Once I've established the directional bias, then I have to wait for a discount to execute the buys. So wait for it to push, wait for it to pull back, enter and make money. If you did take this trade, let me know what entry you guys got in just so I can gauge overall execution here. I'm unfunded next. It's pretty good. Okay, well, I'm guessing you're not in a US client. Well, any apps that allow my transfer my top tier funds to USDT? What are you talking about? What do you mean your top tier funds? Top tier funds are not like another currency that you can transfer. It's like if they're blocking your payout, then the only people that can get it out is them. The only people that can send you your money is them. Roy really deserves a gold medal or some answering all your questions. What a great guy. I appreciate you. I did give a little bit of an attitude before I started answering the questions, but I did end up answering the questions. I got a NAS buys at 88.6. Trust the system, no stress over here. If SL hits, no risk management, no stress, risk management is key. I love it. Bad habits, love to see it. I have a funded next 25K account. Step one, step two, pass. They told me this morning that they cannot pay out because I trade different devices. I haven't got a refund. Trading different devices? So they thought that you were gaming the system by having multiple people trading the same account, but really I'm guessing it was a computer and a phone or a phone and an iPad. Is that correct? Because I hate that kind of behavior where it's like you can only use one device. Who the hell is only using one device? Like even for me, I'll monitor on my phone and I'll execute on my computer. That's two. I was only using their 6K account. I had a feeling it was going to hit the ceiling. Damn. 17,540. You got 540. Good stuff. 55 on Oanda. Oh, on computer and phone, they don't allow. So you have to only use one system. What fucking sense does that make? All right, some people got 570, 531, 645. 645 is all the way up here. Okay. All right, ladies, gents, these are the levels I'm watching. 17,220, write that level down. Sorry, 17,250, write that level down. If the market ends up just breaking straight through, I will be taking a buy position from down here. Very, very discounted price. And obviously going to be very attractive for us to take advantage of that. So you win some, you lose some. Overall, for the day, just to recap what happened, inflation came out slightly higher than expected, with core CPI, which is inflation excluding food and energy, came out even higher than the CPI print. The expectation was 2.9%, which was going to put us on a very good path to hit the Fed's target by the end of this year and to get back to the party rolling. But we had a slightly higher than expected 3.1% compared to the expected 2.9. It's still better than last month. If inflation is still moving down, that's not bad for the economy. Even though the markets are kind of using it as a chance to dump liquidity, and they think that like, oh my God, inflation's coming back up, and people are going to start to panic. Not true. 3.4% was last month's print. We had 3.1%. If you look at the trajectory of the CPI number, let me see if they have a chart here, a visual, so we can show you. We're still making progress, and that's what's important. And so the Fed is not going to change their policy based on one bad print, especially if it's still trending in the right direction. And I'll do a separate video going through the logistics of which sectors had the most amount of gain, which sectors had the most amount of reduction. We'll see that here in a sec. I got to let's go to the Federal Reserve website real quick. And then employment rate is still looking good. Let's actually do CPI. So this is core. This is excluding food and energy, all items, city average. It seems like, yeah, I mean, not a good look. Seems like inflation is still climbing. Not good. But if we look at the year-over-year CPI prints, let's look at the previous versus the expected. So we had 3.7% inflation in September, 3.7% again in October, 3.2%. So this is between October and November, we saw the biggest drop off. And I think that's really what led to the bullish momentum that we've been seeing the past 2 months. This showed the markets that we were about to just start cutting rates. And that's why the expectation going into 2024 was 8 rate hikes or 7 rate hikes or something crazy. which is not going to happen, obviously. In December, we had an even better print at 3.1, and that's what started to gauge the market's interest in really, really putting the inflation risks behind us. We were expecting 2.9. That was the forecast. We ended up with 3.4. Or sorry, we ended up with, we were expecting 3.2 last month. We ended up with 3.4. And so now, even though we had a higher than expected number, we're still trending lower than last month. We're still back to that 3.1 number that got the markets excited back in November and December. That's why I'm not letting go of the bullish bias just yet. It's like there's still so many reasons that the market wants to go bullish, and I haven't seen any emergencies that would prove otherwise, except for the number one thing, which is Bezos selling his stock. Because I cannot understate how investors follow what Bezos and Elon do. If they see them starting to sell stock, especially at the highs of a market, they start to sell because they think it's the top. And that's the thing about self-fulfilling prophecies. This is the one thing I took away from George Soros, which was the theory of reflexivity. You can create the thing that you're trying to avoid by panicking about the thing you're trying to avoid. Right? So it's like people get scared about a recession, and so they stop spending, and then that causes a recession. So it's a self-fulfilling prophecy. So CPI definitely looking better. I think that the market is very excited and ahead of itself, and this is just a long-awaited correction. All right, any questions, comments, concerns before I hop off here? Yesterday was an absolute banger. Yesterday's trade was so good. It was clean, it was effective, great execution, and entry, of course, was on point. Okay, this is what the trade looked like yesterday. So we had a break, retest, we hit the second entry here, and the market ended up flying all the way to target. And so if I can just show you the receipts from yesterday. That was a clickbaity ass caption. I'm sorry, guys. I don't like clickbait. Okay, so this was the trade idea. You guys can see the entry price is at 17,940 or 938, excuse me. And the market was coming back for that retracement right back to that zone. So if we can just look at the before, which was this, and then the after. We broke all the way through all the take profit zones. It was an absolutely beautiful trade. And congratulations to everybody who was on the stream yesterday. Any questions before I hop off? Exactly 2 phones and a computer. I'm in Canada still waiting. Yeah, that's ridiculous, honestly. We got to do some research on the firms and make sure that their rules are not complete BS. I have a life philosophy is don't follow stupid rules. You don't really have a choice on the prop firms, so it's better not to pick a firm that has stupid rules. All right, so this is what I'm talking about. We're going to see that dip through. As soon as we see a wick on the downside, if we close back above the 1998 level, I'm entering this trade. I haven't traded gold in about a year and a half. If we see this drop and then wick back above, I'm entering this trade for a swing trade. Bitcoin's in a retracement. That's good. US 30 blew right through that entry opportunity, which would be right here. Yeah, not taking that. By the way, DXY, we already covered the DXY, but very straightforward. Magnets don't lie. 105.7, next target. The magnet indicator has not lied. You can see the first level at 103.7 got tapped perfect. The second level, 104.5 got tapped perfect. This level, 105.69 or 679. Once we get up here, we'll tap perfect. And then up here, if we get there, I think it's going to be another great play. So I'm bullish on the dollar. Bullish on the dollar, bullish on the dollar, bullish on the dollar. That doesn't mean things can't retrace. Let's get that clear. Waiting on gold, no entries as of yet. Please help me with silver. I want to long it. Well, first off, brother, if you're asking for help on social media, on an instrument, you should not be trading it. You should be learning. I really don't get why this is so hard for people to understand. It's like I don't know how it is. Oh, like let me be the chef of the restaurant. Like let me be the pilot. And you're in the pilot seat calling somebody being like, "Yo, I want to fly this plane real quick. What should I do?" Hold on. Maybe you should sit in the passenger seat for a second and watch this thing play out. Maybe you should, right? Maybe you should figure that out first. And I'm not saying this to be facetious. This is real. Like trading is a very frustrating game if you're not, if you're not competent. And so that's why I'm trying to urge everyone to avoid the headaches and the bad habits and the trauma and everything that is required to be a successful trader by not, forcing, really by not forcing trades with a strategy that you're not clear about just yet. Okay, so let's talk about commodities real quick. We're headed down to the buy level here. So I would say 21 and a half for silver. I think that'd be a pretty good shot here for longs. All right, so I'd be waiting for either a double bottom at the 78, which is possible, but I think just a little bit of a grab through would be the ideal entry. Like you want to see a bunch of support get formed. You always want to see the liquidity grab and then closure above. That's prime time. So for silver, right now, it's clearly dropping. And then if we hit the 21 and a half right here, that could be a great opportunity for that trade. Market is still sitting right at entry, which is actually a good sign if anyone's bullish, is that the longer that price sits here, like usually when it's bearish, you guys know those days. The market will break right through, or it'll start to push in our direction. We get cocky and then it breaks through. The longer the price sits here, I think it's trying to attract more short sellers late in the trend so it can wick up. And then if it wants to drop, it'll drop from a premium. That's my assumption, at least from what the market is doing. US 30 is going absolutely insane. I wouldn't say it's insane at all. The more that you take a step back and zoom out, the more you realize exactly that the market is not insane at all. It's actually doing exactly what it's supposed to do, which is just be. The market is. Okay, it's not bad, it's not good, it's not against you, it's not for you, it just is. Now, is the market aggressively selling off? Yeah, it is. And did I buy this trade? No. I didn't take this trade for a reason because I've been seeing the bearish momentum since yesterday. I've been getting kicked out of my buys since yesterday. And then this morning, I got clapped on a buy. So I've become more selective and then just a little bit more patient, waiting for more confirmations, at least in the next 2 days, just to see if the market's really flipping or not. Roy, is there a good backtesting program that you would recommend? Yes, FX Replay. That's a really good one. They have live market conditions. They have all the way down to the 1 minute chart. It doesn't bug out when you change between time frames. And they have historical data going back 10, 15 years. So I would say FX Replay is top notch right there. We used to use forexsimulator.com for the trading challenge at the FX Summit, but FX Replay has a much superior build and a much superior product. And I look forward to FX Replay potential. All right, I'm not going to break the news. Actually, yeah, I will. Looking forward to FX Replay potentially sponsoring the trading challenge for this year. We're in talks with them as well as TradeZella, but TradeZella has just launched the backtesting feature. And so I want to see if they're prioritizing, if they're prioritizing the journaling over the backtesting. If they're prioritizing the backtesting feature, we might have to include them as part of another trading challenge as well. So a lot of exciting things at FX Summit 2024. You're going to see all your favorite companies, but you're going to see a lot of these names just not make it to then. And so I look forward to seeing all of you there. And whatever the future of Forex is, whatever the companies building the future are going to be, they're going to be at the FX Summit. I'll tell you that much. I highly encourage you guys to grab your tickets before ticket prices go up. Once we announce the speakers this week, once we start announcing speakers, prices are going to go to full price. So I know it's a long time away. I know some of you guys want to wait until the last minute. I can guarantee you that you're going to be mad at yourself. You're going to kick yourself if you don't take advantage right now Because when prices are limited, or sorry, when tickets are limited and prices go back up, don't get on these streams asking for discounts and stuff. Okay? You now know FX Summit 2024, the #1 most exciting trading conference in the world. I'm your host, Roy Dunya, co-founder, Chart Addicts, full-time day trader, and macroeconomic extraordinaire. Okay? That one took me a second to pull off. All right, take it easy. Happy and safe trading. There's one more thing. I wanted to make a funny announcement. What was the funny announcement? Oh, no funny announcement, but World Tour is going to be starting in March. So just like last year, we did a countrywide tour. We hit, I think, 8 cities in the largest 8 cities in the States. We're doing a world tour now. First spot on the tour is Puerto Rico. Puerto Rico. I'm going to have some Spanish-speaking guests with me. I'm going to have the biggest trader on the island at the event, and we're looking for 400 people to come out, 400 or 500 people to come out in Puerto Rico to come and learn for free, to come and hang out with us and some of the special guests that I'm bringing along the tour. And then, of course, there's tons of benefits to showing up for these events, potentially free tickets to the summit, as well as a ton of other opportunities to get involved with us, right? Especially as we start really prepping for the summit. So looking forward to seeing you all there, November 15th to the 17th. Happy and safe trading. CPI news done. Catch you bright and early tomorrow morning. Take it easy. Peace. Guys, World Tour starts on March 1st.